those of you who know Indus might want to wait a bit until I go to the H1 numbers and talk a bit about the outlook, but I'm going to start for beginners as well. So my name is Daphne Sanach, Head of Investor Relations at Indus for nearly 5 years now. And yeah, I'm happy to present you the strategy and a bit of the figures, what Indus entails. So Indus is like a holding company that acquires like Mittelstand companies, small and middle-sized enterprises that looking for a successor. So basically, like first, we are the first choice for family-run businesses that are looking to preserve their life's work. So basically, if there's no one in the family, simply to be said, who wants to be managing director, no one in the particular area, and the owner is in a certain stage of his life where he thinks he wants to step out of the business, we want to be the first point of contact for well-running businesses. So we're not buying any restructuring cases that have an industrial value chain, and they can be further developed along the innovation chain and other strategic pillars, which I'm going to point out. So buy, hold, develop is like the core of Indus. So we are shaping the future with SMEs. So how is Indus steered? I mean, the Indus core is specialized on industrial technology in niche markets. So it's all B2B businesses, not B2C. So some of you might not have heard of metal processing companies or companies that are within the medical sector or in the engineering automation field, because it's all B2B and within a certain industrial niche. So they're structured into 3 segments: engineering, infrastructure, and materials. And to be steered out particularly well with a certain knowledge pool, we have like a segment management, we call it. That's Axel Meyer, who is responsible for engineering, but also for the strategic pillar improving performance, entailing market excellence and operational excellence, meaning how do you enter a market, how do you grow, basically, like how do you grow your revenue and how do you grow your EBIT. So basically this is improving performance. Dr. Grossmann is responsible for infrastructure, which I'm going to talk about later as well, and he's responsible for driving innovation and striving for sustainability. Ms. Degenhardt is responsible for materials, which is within the metals processing segment, metals processing field, and there are also some companies that are more within the medical sector. And there are central functions such as strengthening the portfolio structure, which is basically M&A, our value chain of M&A, which is indeed also, well, separated between each of the board members, because each of them are looking at the targets for their segment in particular. But Dr. Schmidt is responsible for the central functions such as strategy, IRPR, and also like the M&A, strengthening the portfolio structure. The CFO is Rudolf Weichert, exactly, who owns the classical CFO functions. Worth to say that none of the board members interfere with the daily operations of our portfolio companies. We have above 40 companies, and none of them interfere with daily business, but are looking at the metaverse or the higher picture, the bigger picture within controlling terms and within the consolidation of numbers and the higher strategic pillars and direction. So how does it all add up? I mean, for the ones that don't know Indus, we are making sales of 1.8 billion, 8.3 EBIT margin in 2023. And the free cash flow is a bit skewed there with 198.9 million, because we didn't do a big acquisition in Q4 of 2023, but a run rate of our free cash flow, which we are generating, is around 100 million. The dividend yield is 5.4%. And I just had a thought, because I have to point out that we did a share buyback, and basically it's important to point out that this is a bit different with the share buyback, the 5.4%, right? And the net debt is 2.2 years at 2023, but it's a bit higher now due to the acquisition we made. So overall, what's important to point out, our target for 2024 is to generate a free cash flow of above 110 million euros. So let's just think about how does it fit into the strategy Parcours Perform, or what's the strategy called? So the strategy is separated into 4 pillars, which I briefly pointed out: strengthening the portfolio structure, which means M&A, driving innovation. I mean, this is self-explanatory: improving performance and striving for sustainability. So these are our 4 pillars. Going into the first pillar in a bit more detail, I mean, what are we looking for in acquisitions? We have an M&A budget of around 70 million. So, and there is like 35 million left because we already did around 4 acquisitions in the first half and now the first 9 months of the year, and there are still attractive targets in the future fields of infrastructure, networks, automation, energy technology, and we usually talk about growth and add-on acquisitions, meaning the growth acquisition is focused on the INDUS portfolio and the acquisition we do on the first level, and the add-on acquisition is focused on the meaning that a portfolio company itself is looking for an expansion of its value chain and is strengthening the market side or the product side with certain additions. So this is like this is like an overview of the companies we already acquired. So on first level, we already acquired an AI solution, a company focused on AI-based solution for industrial automation applications, with just Gestalt automation. And on first level, we acquired DECMA, who is a system provider for technical marine equipment and focusing on lighting, fire alarm systems, also on yachts and like basically like big ships, so to speak, and which offers a offers a high market potential and has a high growth rate, or basically grows profitably in the next years. So let me just go back and point out the ones we did on secondary level, meaning Colson and Tekalemit and Hauf. These are the acquisitions we made on secondary level, meaning that the company we already have, Hauf, who does housing entry systems, so your cables that need to, such as Wi-Fi or something comparable, needs to get somehow from the street into the system of your house. So basically, they acquired a company or an additional company, Gridcom, who's a specialist for passive fiber to the home components. So with Horn Group, there have been two further acquisitions, meaning what does it do? Basically, like Horn Group is focused on fluid transfer systems, so like basically, or fueling systems. So Coulson is doing industrial valves for control of liquids and gases, and Tekalemit is focusing on fluid transfer systems. So these are both 2 add-ons to expand the value chain of Horn Group. So we covered the first pillar, right? Strengthening portfolio structure. And what we also want to do more of is internationalization. I mean, particularly against the backdrop of current economic situation in Germany and the tendencies, I mean, usually, or INDUS has always been geographically diversified. I mean, there's always been around 50% of revenue coming from outside of Germany, but the main office or of the companies we acquire is usually in Germany. So we have 20 locations in 29 countries, and around half of the revenue is coming from outside Germany. What do we do with internationalization for the portfolio companies? We also offer them like building and strengthening of the network. We support them with legal and other support functions, and we help them with add-on acquisitions, which I'm going to talk about in the next slide. So what does it mean, basically, internationalization at INDUS, and how do we support the portfolio companies? So basically, like, you can have a look at HNS. I mean, all of the companies are on our website, and you can have a like a deeper look. But I'm just pointing out HNS, who are in the engineering segment, who are doing machines in the packaging industry, and they established a customer experience center in Atlanta. And M. Brown is a leading provider of glove box systems. You know, if you have like chemical applications, like in the university field, who is a strong customer, you need to use glove boxes, and that's what M. Brown is doing. I talked about Horn Group, and they're doing a capacity expansion with an Indian JV partner. So this is an overview of the recent internationalization activities we've done, and further information on the value chain you can find on our website or on the websites of these companies. Driving innovation, I mean, a big topic is obviously artificial intelligence. We have separate initiatives, and some of them are already giving tangible results. I mean, meaning that they're integrated within the value chain of production. But for instance, at BTEC Simon, which is our biggest company within the materials segment, this is a company that already applies artificial intelligence within some of their production processes. And here you've got an overview around the corporations with the Fraunhofer Institute and the TU Munich AI Lab, for instance. And in addition, we have something called the INDUS Innovation Promotion Bank, which is something that's not really a bank, but it's an institutionalized unit where basically the portfolio companies can make a proposal for an innovative project. Also, well, generate or present a certain IRR, and we basically look at it in a certain detail on portfolio level, and then evaluate it and basically provide the funds. You know, it's just an institutionalized unit that's headed by an experienced engineer that allocates the funds to particularly innovative projects. Improving performance, that, as I pointed out before, is like basically going into two directions. It's either the market excellence or the operation excellence, and it all entails growth. So meaning, how can you grow your EBIT and how can you grow your revenue? I mean, your revenue line, you are growing by market attraction and your competitive position, and your financial potential, obviously, you can improve by improving your cost base, or in addition, you're improving your drop-through rate. So this is like the combination of operational excellence. Either you're entering a market via internationalization, you're expanding your value chain by an add-on acquisition, expanding your portfolio, or within the financial potential, you always have to look at the structure of your personal costs, like introduction of ERP systems, lean management, and all these things fall under the part of improving performance. Striving for sustainability, for some of you it's more important, for some less, but just let me point out that this is a very important or naturally intrinsic DNA of INDUS to reduce emission intensity, or to be thoughtful about resources and how to use them, because with keeping like a lifetime's work, or keeping like a company in a certain niche and keeping up the legacy of the former owner is always long-term, always long-term focused. So therefore it is within the INDUS DNA, and we are putting a lot of effort in the presentation as well of our sustainability efforts. So we have a certain magazine called the Sustainability Magazine, and we have a top position in the ISS ESG rating as a prime B+ status. So let me just point out the H1 figures, because these are the last figures we actually presented. So, I mean, like now on the 12th of November, which is 1 month away, we present Q3 figures. So this is a bit looking backwards, where this gives you a bit of a glance on the entire picture. So before I go into the segments and talk about engineering infrastructure, you need to get a little certain grasp of what they consist of. Engineering consists of 16 companies. I mean, like within the area of automation and assembly technology. For instance, Bude is within the logistic field, and Brown, I talked about, is within the glove. They're doing glove box systems. Jungmann is doing surveyor rooms, right, for industrial value chains. Heiber and Schröder is doing machinery for the packaging industry. Gestalt Robotics is doing, is in the AI field, so to speak. And this is just to point out some of them. So on the right-hand side, you can see the areas just summarized in this very low heterogeneous segment. Infrastructure can be separated 1/3 into residential, maybe 2/3 into the construction field. For instance, Virus does window systems. Betomax is more of in the construction field, like the house is doing house entry systems. And and Obuk, for instance, is doing doors, and while Weigand is more within the construction field. And we're focusing here more in the future on expanding our knowledge in the infrastructure networks and infrastructure buildings and energy efficiency. Materials is a very diversified segment as well. I mean, on the one hand side, you have companies that are overall, it's all in the industrial materials and processing field. So these are all the companies that basically, such as BTEC and such as Vulcan, they're within the materials and processing industry. And in addition, we have some companies that fall more towards the end market of medical devices, such as Microb, Rolco, and OFA, for instance. So sales by segment, and how did the first half of the year develop? I mean, obviously not a very enchanting picture. I mean, due to the economic situation, I mean, all of the segments have been decreasing. That's why we adjusted our guidance back in July for the full year, and we're expecting now sales basically slightly decreasing in engineering and infrastructure, and in materials even decreasing. So the EBIT margin per segment was obviously very disappointing in engineering due to the order book situation that you've already seen in Q4 2023, and in materials it's due to the top line that's actually normalized, and the price increases that you couldn't put through, and then the drop through rate, which obviously didn't develop positively, and therefore, I mean, the margin is 9.4%. Infrastructure was quite a good development, because you can see that despite the decreasing revenue, we're able to increase our EBIT. And here we haven't really adjusted the EBIT margin, so it's still 10 to 12%. But everywhere else, we've decreased the expectation for the EBIT and EBIT margin. We adjusted another figure called EBITDA adjusted, due to the fact that we're doing quite a lot of acquisitions. You have PPA, right? I mean, like if you buy a company, you allocate the assets, and obviously you have goodwill. Goodwill is not amortized, but it's due to an impairment test every year. And basically, the PPA generated actually decrease your EBIT, right? But it's not operationally relevant. It's not the operational result of the portfolio companies. So we are adjusting the EBIT by the PPA, and we call it EBITDA adjusted, to help you get a clearer picture of the genuine operational development of our portfolio companies. So this is just what we talked about. I mean, sales dropped by 7.2% due to engineering materials and basically all of the segments, and the EBIT margin just developed positively within the infrastructure segment. Working capital, I mean, slight increase year on year, which is usual, which is a usual development, and basically our investments, as I previously pointed out, add up to, well, this is M&A and CapEx, so this is 35, but don't get confused because we are now with DECMA, you have to add to the 18, you have to add another. Well, you can see in our quarterly report, you have to add another figure, and we've already spent 35 million on acquisitions within the first half. We have 35 million left for acquisitions, so that's what I wanted to say. Strong development of free cash flow in the first half of the year, 41 million. And if you think about, okay, they want to generate 110, this is possible because it's skewed towards the back end. So just another view on our figures. I mean, like free cash flow, basically all of our balance sheet figures in good shape. Free cash flow, like 17% up, net debt plus 12%, and our equity ratio has also developed positively to 38%. So what can we say? I mean, this looks very odd to look backwards to H1, but because it's so far away now. But basically, I mean, what we have to point out, the earnings per share have, despite all the turmoil and the operational development, I mean, the earnings per share have significantly improved to 1.21, and we have a strong free cash flow. And we have still the guidance, we haven't adjusted for the 110 million of free cash flow, and we are still have a very strong and well-filled M&A pipeline. Guidance, I mean, like, this is the economic outlook. I don't need to tell you, all of you, I think, follow the media. I mean, we know that Germany has lagged behind the international growth figures or international outlook, but now it seems to be more challenging what's coming out of externalities such as the US election, or such as which also influence the stock markets, or which influence general sentiment as well. So this is the adjusted guidance. I mean, it was adjusted in July, right? So this is the guidance we adjusted in July, and you can see that we've reduced the revenue, and we've taken down the EBIT and the EBIT margin, but the current consensus is currently at 133 million for the EBIT, which we feel comfortable with. The INDUS share, I mean, I pointed out what INDUS is a dividend-paying company. We've never not paid dividend. So the last time we paid 1.20 euro, and we usually pay out up to 50% of our net profit of the INDUS Holding AG. So this is retained, and the 50% are retained. Let me just skip this and just point out the shareholder structure. I mean, we have a very solid shareholder structure with long-term investors. Very news protector for Sickring that have progressively increased their share to 5.4%. And Versicherungskammer Bayern is owning the stock for nearly a decade or over a decade. Yeah, treasury shares, I pointed out. And to be honest, there might be more. I mean, there is less free float than the 65% because we know all of our investors. So I think there's less free float and more in solid hands than you can actually see from the chart. To give you a roundup, and then we've got 5 minutes for questions. So basically, what does the INDUS share entail? It's Basically, you have the access to an asset class which you otherwise wouldn't have the access to. I mean, we generate cash, a lot of cash, by buying companies, holding them and developing them. And we want to grow profitably. We are diversified geographically and via our segments and the content of our segments. And we have a sustainable corporate strategy while sustaining and maintaining the life works of the entrepreneurs. So overall, this is the INDUS strategy plus the INDUS latest figures. I'm happy to take some questions. Thank you.
All right. Well, thank you very much for this great presentation, Mrs. Sanak. We do have a few questions from our viewers. First off, and I think this is really the core competencies of your group, is basically how do you identify, then select and process with acquisition? Do you look for good financial performances? Do you acquire them when there's special situations? How do you manage that?
Yeah, we basically don't acquire any company that's distressed or that needs restructuring. So it could be two ways. Either the owner directly contacts Indus, or the other way, that we work together with them, I mean, with the market, and you have like some consultants in the market that access Indus. And at the same time, we have an M&A team that's screening like a long list, and that basically does evaluations of revenue, profitability, debt structure, equity ratio, and basically then looks at the innovation potential, the growth potential. How can we leverage or how can we build value around this company? And basically, this is how it works. So first, either they access us directly, or secondly, it's via our research. But it's very important that we don't buy any company that's in distress. We buy companies that are in a niche, in a very successful industrial technology value chain. And because the entire management board has such a strong engineering background, they're able to identify further potentials, and not about the financial. It's not about financially restructuring. It's about finding the core. Yeah.
And then after that, how do you ensure that those companies are that you integrate in your portfolio always bring operational synergies or management synergies? How do you make sure that they are greatly incorporated into your company?
Well, first of all, the owner stays within the company quite a long, like a bit of time before you're looking for a managing director, so there's not an abrupt change. And then we take a certain observation period. I mean, like we integrate the accounting and the controlling, but we don't really interfere within the operations. You know, they do their operations, their supply chain, in a sense, their IT, and their daily business goes by itself. But then you start working on the highest strategic pillars, which is done by our internal experts. They identify innovation potential, they identify sustainability potential, and all of that. So we are a helping hand for the companies, but because they can run on their own by themselves. But we help them with the higher strategic path that they wouldn't be able to realize otherwise.
Perfect. And maybe last question, because we only have 1 minute, is a
Yes,
twofold.
true.
First off, we were discussing risk, so how's energy risk in Europe affecting you? And second of all, do you see therefore more acquisition being done internationally and not just developing internal product internationally, but really acquiring companies abroad?
Yeah, but first of all, energy risk, I mean, we are not as energy intensive as you might think. We don't have mass productions, you know, like we don't have mass metal processing production. It's all very focused. Secondly, topic internationalization. It's a big topic. I mean, it's a big topic that's in discussion to think how do we cope with more international exposure, and how do we set ourselves ready for that? Yeah.
All right, perfect. Well, thank you very much for that. It's exactly 1 o'clock, so time is up.
Perfect.
Thank you,
Perfect.
Mrs. Namak, for your great presentation, and we'll be
Thank you.
continuing to follow the Hindus Holding story for sure. Thank you.
Fantastic. Thank you, Julian. Thanks, Matthias. Thanks. Bye.